Hello and welcome to USAReverseMortgages.net, brought to you by iReverse Home Loans. My name is Brandon Webb and I'm your reverse mortgage expert. Today I'd like to talk about industry update and basically just what's going on. We haven't had an industry update video or blog in kind of a while, so I want to keep everyone up to speed. So the reverse mortgage industry has kind of stayed on the same trajectory of being a little bit slower than normal right now, and that again is due to the financial assessment. Just a small recap of the financial assessment for those of you who may or may not have watched our other videos in regards to it. The financial assessment was put into place to make sure that the underwriting guidelines are just strict enough to see if they feel that reverse mortgage candidates can meet their duties as far as paying their property taxes, homeowners insurance, HOA dues, things like that. So they do take a deeper look now than they have in the past at your financials and what they call residual income. So they look at what comes in and what comes out, and they want to see a certain amount left over. For one person it's around $500, and for two people it's around $1,000 a month of residual income is what they're looking for. But remember, keep in mind that they're not counting your mortgage payment. They're not counting things like food or anything like that. They're counting minimum payments on credit cards, car payments, taxes and insurance, HOA dues, and utilities. Okay, so for most people, for a single person, having $500 left over or $1,000 left over for two people is really not that abnormal, considering they're not counting your mortgage payment. So they are using this to determine if they feel that someone may or may not need a LESA, L-E-S-A, Lender Enforced Set Aside. They come in a full LESA or a partial LESA, and it's basically an escrow set aside that the lender can push upon you. So most people will still get approved for a reverse mortgage, but those who showed a lack of willingness to pay in the past, as far as paying their taxes, insurance, if they have judgments against them, things like that, the underwriter may determine that they feel those people need to have a set aside to pay the taxes and insurance. For whatever reason, they may think that they're not up to snuff paying it for themselves. So the only way that loan will not work is if there's not enough equity in the home, i.e. they have to pay off a big mortgage or something like that to cover that set aside. Sometimes it can be for many years, so it can be expensive. So if there is not enough money for the LESA and they've determined that you need one, they will not be able to approve the loan. A newer rule that came out just a little while ago is if for whatever reason you show negative residual income. So let's say that you need $500 left over residual income and you show $300. Well, then they may tell you that you just need a LESA set aside and you may have the equity and everything's fine. Let's say you somehow show negative for whatever reason. Maybe you took a loss on your taxes the year before or stuff like that. If you show negative residual income, that is an automatic decline. There's nothing that they can do about that. It's an FHA hard and fast rule that was put out. So, to recap, the reverse mortgage industry is a little slower because the financial assessment is causing some more people to fall out than usual, but we're stronger than ever with financial advisors or people in any position to advise their clients financially. CPAs, financial advisors, bookkeepers, elder law attorneys. These people are taking a new look at reverse and seeing how stringent the new guidelines are and, making sure that they are a good fit for their client, which more often than not now they are. They're a lot safer and they're set up with the client's best interest in mind, and using reverse mortgage loan officers like myself, oftentimes we can even do the loan for very little fees, sometimes even no fees. We are allowed to allocate the money that's made on them as we like. So if we decide to put that back towards the fees and there's enough for us there that we can put them back towards the fees, then we do that. That does depend on initial loan amount. So if you have questions on that, you can give me a call. And I'd love to discuss it with you. As always, if you have questions about anything regarding reverse mortgages, you can call us at 800-598-6265 or send us a message on the website. Thank you so much. Hope you're having a wonderful day. Bye-bye.